The financial system is on fire right now. I'm going to show you what's happening globally. All central banks have now coordinated, and the details are here in this video. If you want to know everything that's happening right now today, you've got to watch this video. Stay tuned for all of it. I'm going to talk about the Federal Reserve. I'm going to look at the other central banks, show you how that connects in with SVB, First Republic, Credit Suisse, and everything in between. I want you to see the details because this is going to affect you, what you've got at the bank, and of course, what you should be doing. I have to highlight this. It's important. You came here for the truth, so let me unveil that for you. I'm looking right at the Federal Reserve's own website back on March 12th, and they had this. Federal Reserve Board announces it will make available additional funding to eligible depository institutions to assure banks have the ability to meet the needs of all their depositors. So basically what they did was they said we're going to back up everything. The FDIC, the Federal Reserve, the Treasury, they all came out and basically said, don't worry, you're all good. Then Janet Yellen says, well, it's not going to be everybody, but it's going to be somebody. And that kind of spooked the markets. Hey, wait a minute, what about me? This affects so many, not just SVBs and maybe some small regional banks. The mid-sized banks are now worried. If you watch this video, I'm going to show you what the mid-sized banks are saying and how they are actually a large percentage of the total. You've got to see this because this is going to affect everyone in one way, shape, or form. Check this out. You looked at the discount window borrowing. Now, I have an entire video. I just recorded it, but this is coming up now. I have to tell you the whole thing about Credit Suisse and everything. So look out for this video where I explain it all. Discount window borrowing just went to extreme levels, and you had seen, if you break it down in the H41, that's kind of like looking at the updates coming out of the Federal Reserve. Essentially, they set up that new facility, BTFP, Bank Term Funding Program. There wasn't much take on that. The companies really didn't want it, and instead they went through this different avenue. Okay, even though it's much higher interest rates, by the way. So looking at this right now just shows us that there's a lot of instability, a lot of insecurity about what's happening. But I'll tell you something, the balance sheet is rising to a great degree. Now, the balance sheet, while it might be rising, the treasuries and the mortgage-backed securities did decline. So that continued to go down. But it's through this different avenue that it's expanding. So are they doing quantitative easing? Not in the way they were before. Is the balance sheet expanding? Yes, absolutely. But it goes further than that. You've got to see this, okay? Look, I'm going to show you it. Understand how big this is. You'll get that right here. Coordinated central bank action to enhance the provision of US dollar liquidity. This is from March 19th. We are talking about the Bank of Canada, the Bank of England, the Bank of Japan, the ECB, and the Fed and the Swiss National Bank announcing a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap arrangements. We saw this, that's always on and off, but we saw this during the financial crisis. And that ultimately shows us how weak, how fragile and frail this system is right now today. We were being told that everything was fine. Don't worry about it. It's not a problem. As soon as SVB got bailed out, everybody that was so cocky came out and said, ha ha ha, look at this. We didn't have a crisis. What are you talking about? Then the next bank had trouble. Then the next bank had trouble. And the second biggest Swiss bank, Credit Suisse, failed. It ultimately failed, and then UBS comes in, sweeps it up, and buys it for literally a fraction of what they were trying to get it for a few years ago. This is a big concern because your finances are affected by it. But it goes further than that, okay? You've got to see this. Check it out, okay? The Federal Reserve and 5 other central banks announced coordinated action on Sunday to boost liquidity in US dollar swap arrangements. This is the latest effort by policymakers to ease growing strains in the global financial system. So this is basically the Bloomberg article written about that. And you got to note that all of the while, we were being told, don't worry, don't panic, stay calm, don't worry, don't panic, stay calm. And of course, that's the exact opposite of what you should be doing. The U.S. Central Bank has typically provided access to such arrangements at times when there's a squeeze in the availability of dollars. And that can arise because banks outside of the U.S. typically have obligations that are denominated in greenbacks and in times of financial strain have less access to dollar funding. We initially saw a huge uptake in that a little while ago, maybe it was a month ago or so, from the Swiss National Bank saying, hey, we need a lot of dollars at the Federal Reserve. And the Fed didn't really say anything, but they posted all that information is public on the site. I brought it up to you here. And it was, I think, $11 billion. And at that time, that was a significant amount. And the concern was, wait, maybe Credit Suisse is having a problem because all these things, I talked about like how many different events had happened, but Credit Suisse seemed to be involved in all of them, all the bad things that have happened. And so that kind of looked likely. And here we have it today. We realize how bad it had become, and now they've expanded that to all the central banks. So this, in fact, is like money just sloshing around, and those are dollars specifically. I think we got the writing on the wall at this point. Likely, if there is an increase in the Fed funds rate coming right now this week, the interest rates, I mean, I'd be surprised. If it is, it's going to be 25 basis points. That's it. That's the end of it. But now it's looking likely that actually it's not going to happen. And what does that mean? More inflation coming your way. This week has been a liquidity crisis, of course referring to the previous week, but it seems that the moves by authorities to remedy the situation have not completely reassured wary investors. Oil prices plummeted. Of course, there's worried about contagion. That's what it ultimately comes down to. If the Federal Reserve decides to go crazy, bazooka, massive money printing mode, decreasing interest rates, all that stuff, watch the US dollar fall and you will see assets like gold suck up all of that investment. But understand this. Mid-sized banks plead for unlimited FDIC backstop for 2 years. Wow. This, my friends, is the big one. Okay? Just look at it. Mid-sized Bank Coalition of America sent a letter to the regulators arguing that a temporary suspension of the FDIC's deposit insurance limit is necessary to ensure that smaller banks can navigate the current banking crisis. Doing so will immediately halt the exodus of the deposits from the smaller banks, stabilize the banking sector, and greatly reduce the chances of more bank failures. Maybe that is true, right? Because if they're worried about that, well, that would be the case. But what does it signal? That if a company has a problem, there's always going to be somebody there to make sure that it's A-okay. So you can take risks. So you don't need to worry as a bank because, don't worry, somebody else is going to take it over and fix it. But what does that mean? What does it mean when the government is going to bail out a massive bank? We're not talking about a small little bank. In some cases, it could be a very big bank. And of course, you look at it and you have to realize this means there's a moral hazard. This means that they don't have to worry about anything anymore. They're going to take the maximum risk they possibly can. And that means the taxpayer has to bail them out. Very dangerous, extremely. Nearly 200 banks are at risk for the same fate as SVB. You thought I was kidding when I talked about this. You are watching right now the biggest financial crisis now, not maybe in the future, not maybe in the next few weeks no, right now today. This is the biggest financial crisis since 2008. Nearly 200 more banks may be vulnerable to the same type of risk that took down Silicon Valley Bank. There are 186 banks across the country that could fail if half of their depositors quickly withdraw their funds. In my opinion, based on what I've seen, the number is much lower than that. But it would not be a problem for people to, get that mentality and think, you know what, I'm going to move my funds. Where are they going to move them to? Bank of America, JP Morgan, all that, of course. So they're the winners. But it wouldn't be an issue for people to think, yeah, now's the right time. And they would do that. The concern is that these banks hold a significant amount of their assets in interest rate sensitive financial instruments like government bonds and mortgage-backed securities. The value of those older, low interest investments dropped sharply as the Fed hiked interest rates over the past year. And this is why they do not want the Federal Reserve, to increase interest rates. Do you see? because they made bad investment choices. They took things like mortgage-backed securities, thinking that they were good investments, even though at that time, 2008, let's say, they were considered toxic assets, toxic securities. And now they're just mortgage-backed securities. Toxic was the word, toxic, toxic, toxic. But because we don't talk about that like that anymore, now this is crazy. The way that they change this in the media, you're being lied to every single day. They're telling you up on the big screens. They're the ones saying, hey, you got to watch this, and then it trickles down because all of those generic YouTubers are going to spit that garbage in your face. Is that what you want? You want garbage in your face like that? You want them to spit in your face? It's unbelievable. Look at the charts. I've got the data. I've got the information you need. Banks with less than $250 billion in assets account for about half of all commercial and industrial lending. Okay? Small and medium-sized banks account for 60% of the total residential lending. Small and medium-sized banks account for about 80% of total commercial real estate lending, and they account for about 45% of total consumer loans. So look at this. On many different ways you look at it, the small and the medium-sized ones are at risk, putting you, the individual, at risk. Massively, like overwhelmingly. This is huge. It's really, really huge. It's not just the JPs and the Bank of Americas that we should be paying attention to. It's so much bigger than that, isn't it? And that's what this video is about. You've got to watch where your money is today, number one. In my opinion, people shouldn't have savings, large chunks of savings, unless they're going to deploy that into an asset soon or at some point in the near future in a bank. I talk about the pillars of prosperity. People keep asking me, well, what should I do with my money? Have you seen the pillars of prosperity? It's a video I did. It's pretty short. Pillars of Prosperity, the Money GPS. You do a search for that, you will find it. Essentially, we need to have our self-sufficiency and preparation in order, and we need to have the ability to make more money. These two things are essential now. It's not as if, yeah, it's a good thing to do. It's essential now. And you got all these other people, they're not telling you this real information, the real deal. This is the real, why do you think I throw this up all the time? Why? It's because it is now at the point of critical levels that we are in. Critical levels. And we can ignore it, but ultimately it's not going to be at your own service. It's not going to be there for you to just skim over this, ignore it, and so on. Don't listen to those others. I shouldn't talk about that, but I just see people getting swindled all the time. And I see what their views are like. Trust me, they're the ones that are getting the attention. And it's frightening. Watch out. Be careful. Have your assets in the places where you believe that are safe and secure and sound. And do not put all your eggs in one basket. You've heard that before. You got to diversify, but geographically diversify as well. If you're expecting the dollar to go down, wouldn't it make sense to have other currencies as well? Maybe you would want to earn income in other currencies. And maybe you want to bring that into the US dollar because that's where you live and that's where you pay your bills and so on. But earning income in different places allows you to diversify as well. Many different things. You ask me a question, you ask me for a video, I'll bring that to you. Just let me know. There's not enough comments. I don't know why people are so shy to comment. I spend time every single day trying to get rid of those spam garbage ones. So you got to do me that favor, do yourself a favor, and comment down below. I'll see you tomorrow. Take care.